Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 7th of November 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a quick mentioning of our JFD YouTube channel here, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which you can find here on jfdbank.com. And if you click on the tab on the top here, research, and it'll take you to our page, which we update on a daily basis. So yep, feel free guys to check us out here. But for now, let's jump into the charts. Now the first one I want to touch on here is the Nasdaq100. Now yesterday it closed slightly in the red, but looking at the cash index right now, we can see that the index is back above this key barrier here near the 8,228 zone. So it's roughly around the 30 mark. So for now, of course, everything still is looking quite positive. We are still trading above this short-term tentative upside support line taken from the low of the 3rd of October, and in a way, this does have a good chance of drifting further north here. So if it does, then yep, we may see a new all-time high here on Nasdaq 100, and yep, it will be quite interesting to see where exactly this could drift further. So where exactly could this basically, which level it could test. But for now, everything's, like I said, looking quite positive. Let's see if the buyers can kind of keep the index above here, above this 228 zone, and if they do, then yep, we may see maybe a test of the 8,300 zone. Who knows? But again, that's a bit of a long shot. Let's see how this is going to play out. If it starts dropping lower, and if we see a drop below yesterday's low here near the 8,157 zone, if we see the price falling below this, then in a way this could lead, of course this would mean that the upside line is now broken, and in a way we could start targeting slightly lower areas like the 8,120 zone, or even the 8,018 territory right here. Near the low of the 30th of October. Around there, of course, not far from there, we do have that psychological 8,000 level as well. But again, let's not get ahead of ourselves. First, let's see where this goes further, if it can go further north, and where does it go. Silver, I looked at this one yesterday and recently, basically. So this is quite an interesting picture here. So this morning I was talking about this one as well, and basically what I was saying that if this upside line continues to hold, there is a possibility that we could see this one drifting, pushing further up again. But as you can see now, the commodity is now trying to make its way down again, and once again it's doing the same thing as it did yesterday. It's basically, it did drop below this upside line. It broke below the 17.51 zone, but it still cannot close that 4-hour candle below it. So in a way, this it is quite an interesting level here. So we're waiting for that close. If we get a close below this, then yep, this could be opening the path towards slightly lower areas. We will be then aiming for the 17.15 zone. marked by the low of the 16th of October, and then we'll take it from there, see what he wants to do after. But for now, it's quite interesting here. It seems that he wants to drift lower, but it's kind of struggling to stay below this level here, below the 17.51. The bulls are really fighting it strong. Again, as I said this morning, for us to get excited about higher levels, well, ideally we would like to see a push above the 17.91 zone, and only then kind of we could get a little bit more comfortable, let's say, with higher levels. For now, it is where it is. Let's see if it can travel further down, but again, we need that at least a 4-hour candle close here below this 17.51 zone. Jumping into a few pairs now very quickly. So AUDNZD, I haven't looked at this one for quite a while, and as you can see, after kind of rebounding nicely here from this key area of support near the 1.0660, the pair is now drifting higher. It is now also trading above this little short-term tentative upside support line here, taken from the low of the 23rd of October. But the more important thing here is that it's knocking on the door of this key area of resistance near the 1.0825 zone. As you can see, it did have a few overshoots here, but it also cannot close that 4-hour candle above it. So we're waiting for that close, and if we get that one, then yep, we'll start aiming for higher levels. Initially, we'll target the 1.0840 zone. That's marked by the highest point of September here. And if that fails to withhold, then yep, it could be we could be aiming then for much higher levels. And for this one, probably I need to jump into a daily chart, because you can see we haven't been at those levels for quite a while now. So if we get a break of that highest point of September, which I've mentioned, the 1.0840, then we'll start targeting these levels right here. And let me just quickly mark that on the chart. These levels right here around the 1.09 1.0909 level. Basically, that's the high of the 26th of October. Is that correct? Yes, that's correct. So the high of the 26th of October of 2018. So that this is how far we have gone. We haven't been at these levels for a year now. So it could be drifting further north, but again, a few clearances would be needed before we could aim for higher levels. So in a way, of course, first barrier is this one right here, which is already getting tested, the 1.0825. If we get a nice close of a 4-hour candle above this, then it increases the chances of a further move higher towards the 1.0840. And if that fails to withhold, then yep, this is where it could place. It could, first of all, of course, would confirm a new high for this year, and it could open the path towards the high of the 26th of October of last year. So keep your eyes on this one, guys. Quite interesting. If it suddenly starts reversing back down here, well, we'll start considering slightly lower areas if we see a drop below the 1.0793 zone, 93, 94, roughly around there. That's basically the low of yesterday. And then if we do get a drop below this, then yep, it could test the 1.078081, or even go back here towards this upside support line for a quick test. So yep, guys, it's quite interesting here, and quite interesting developments. This in general, this pair is quite interesting to trade. So but as always, guys, have your stop losses in place, be very careful here. And for now, everything is looking quite positive, but we just need that little extra confirmation in order to get comfortable with higher levels. And the confirmation is at least a close of a 4-hour candle above this 1.0825 level. USDJPY also setting up nicely here for a possible move higher. Now the pair is near its key area of resistance around the 109.30 zone, plus minus a few pips up and down here, but in general, if we get a break above the 109.32 zone here, which is the high of the 31st of July, then this would be a nice move higher here, which could open the path towards the 109.91, marked by the high of the 30th of May. And let me just actually double check that. Oh, is that the correct level here? Almost. wait, one moment, guys. Let me just quickly accurately try to grab this one. There we go. Is that around? Yes, so around 109.91 zone. So yes, guys, so this is the level that we're going to be targeting, but only if we get a nice break and a close above this 109.32 zone. We'll start looking at the upside if we get a push above the 109.30. I do understand it's only about 2 pips here between these two levels, but nevertheless, a nice round number. A nice even number. So basically, we need to see a nice good pop above this first before we could get comfortable with higher levels. For now, it's at a very tricky spot. In a way, this area could act as a strong area of resistance again, and then we could see the rate falling back down and potentially maybe moving back towards this upside support line. Tentative, of course, but nevertheless an upside line. But again, that's why, guys, for now, we're just going to observe this one. We're not going to try to predict this one or should I say, try to speculate on this one too much. We'll wait for that break, and only then we'll see how it wants to perform further. But again, for now, it seems that it's likely it is kind of sitting more on the positive side. But again, we need that confirmation break. GBP Aussie. So, GBPUSD, I keep talking about this one for the past few videos, basically. It continues to form a fantastic, long kind of, or longish falling wedge formation. Of course, we all know that these patterns tend to break to the upside eventually, but the only thing is that before we could examine higher levels, we need that confirmation break. So as you can see this morning, I talked about this one this morning, by the way, and we were still hanging around here near the upper side of the wedge, and in a way it did look quite good. But what I was saying, that we needed to see first a break and a close above this 1.8736 zone before we could get excited about higher levels. And look what happened. I mean, look, it sold off. It traveled lower. It tested the lower side of the wedge and rebounded, also rebounded from this 200 EMA on the 4-hour chart. So basically, perfect hit of certain levels here. And yeah, so for now, it's going to be very interesting to see, can it climb back and can it actually break the upper bound of the of the falling channel and then move higher. But again, until we get that break, we're not going to do anything here. We're going to continue probably targeting the downside, because in a way it could climb a bit higher again, hit the upper side, and then sell off again to the downside. So that's why with this one, guys, it's a very interesting pair, but wait for that confirmation break. And even with the downside, we're going to take a very, or should I say, slightly conservative approach here, because we'll wait for a drop below the 1.85 zone first before examining a potential move lower. So as long as it kind of remains and stays trading inside this pattern, in a way, we're just going to continue observing it. We're not going to try to predict exactly where it's going to go. Just I want to say that these, according to textbooks and all the TA rules, these patterns tend to break to the upside, but again, a confirmation break is needed first. GBPUSD, so also sold off nicely here to the downside and moved to the downside, tested the and broke slightly below the psychological, or I wouldn't actually maybe call it a psychological, but just a nice, beautiful number of 1.28. The 1.28 zone acted as a nice area of support. And of course, the pound sold off today after the Bank of England came out with the interest rate decision. Of course, it wasn't a surprise that the interest rate remained the same at plus 0.75. But the interesting other thing was about, and this is why the pound sold off, is that the committee that consists of nine people. There were two members who decided to vote for a cut. So in a way, this could kind of increase the possibility of a possible cut later on, and and that's why the pound kind of took a hit here. So, but again, it is just it's a moment trade, and it's a moment reaction, momentary reaction. Of course, now at that point, yes, the pound sold off. But if, for example, this 1.28 level continues to hold, and we get some sort of good developments from Brexit, then we could see the pound totally ignoring all the BOE stuff and just kind of shooting back up here. So that's why, yes, that was a good moment here. Whoever caught the trade here to the downside, wonderful, congratulations. But now the main question here is from the technical side, will it actually drop below the 1.28 or not? For now, this is the idea that we've got here. This is what we've posted here on our JFD account on TradingView, and basically we've said that if we get a break, if we get a drop here below this, then in a way it increases the chances of a further move lower. The only thing is here that we're not going to drag this one too much to the downside. We're going to aim for the 1.27 zone around there, maybe just slightly above it, but basically it's going to be near the 200 EMA here on the 4-hour chart. So good potential target for the bears, because this level here could provide a bit of support. It could stall the rate temporarily. So that's why for now, guys, we're just sitting this one out. We're gonna wait for a drop below the 1.28. If we do get that drop, and also this is where I will repeat myself, a close at least of a 4-hour candle. Of course, ideally we would prefer a daily candle, but if we start seeing a 4-hour candle closing below this, then in a way it kind of increases the chances of a further slide lower. And again, like I said, we're not going to drag this one too much to the downside. We're initially just going to aim for the 200 EMA and the 1.2707 zone, roughly around there. As you can see, we do have a tight stop loss here as well. So yep, guys, this is where we're keeping an eye on, and let's see how this is going to play out. And the last pair for this session, that's going to be euro dollar, of course, as always. Now, not much happening here. It did try to push higher, but failed to do so, failed to remain, and failed to close its 4-hour candle above the 200 EMA here on the 4-hour chart. And as you can see now, again, it's testing this 1.1063 zone. If we see a further move lower, we're still going to be targeting the same level as I've mentioned in my previous videos, the 1.1021, and then we'll take it from there, see what he wants to do after. In terms of the upside, well, I mean, we need to see a break of this downside line. Don't get me wrong. I do understand it's not an ideal one, but in a way, just could kind of add a bit of confidence here for the bulls, and in a way, we could see basically a confirmation of this wide range. So if the rate starts rising again and pushes above this downside line, yes, it increases the chances of a further move higher, but a further move higher within the range, because don't forget that we're still within this range here. We're balancing, the pair is balancing near its lower side, so we need to see a nice good drop here, a strong move lower before kind of we could examine lower areas. For now, it's just kind of flirting with this lower side of the range, and if the pair decides to push back above this downside line and pushes above the 1.1103 zone, roughly around there, then in a way, like I said, we could start considering higher levels, but only within the boundaries of this range. So keep your eyes on this one, guys. Okay, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, in my Traders Espresso, we'll have a look at some of these instruments. We'll have a look at some of the other instruments as well, and we'll see how everything's getting along. And as always, thank you very much for, like I said, for tuning in. And if you're still trading, guys, be very careful. Don't overtrade. If you can leave it for tomorrow, leave it. But as I said, guys, have a wonderful evening. Thank you very much, and bye-bye.